Good morning, everybody. Welcome to today's presentation. My name is Michael Valtos, and today I'll be talking about new advances in order flow analysis. And so it's 10 o'clock Central Time here in Chicago. I'll get started in just about a few seconds here, just waiting for a few last minute attendees to come on. But it's been an interesting market. Honestly, when um, if you asked me last year what I thought the markets would be like if Biden wins the presidency, I thought they'd be a bit calmer. But I've been proven wrong, and these markets have been great trading opportunities. So, and if you're using order flow, you can see things that other traders aren't going to see. All right, so what I'll be talking about today, if you can't see my screen or you can't hear me, just let me know. Honestly, sometimes it's something as simple as logging out and logging back in if sound drops off. But we did a technical check this morning and everything works fine. So in today's presentation, there's I'm an order flow guy, right? I'm a futures guy. I trade futures. I've been in the futures industry for basically my entire career since the 90s, right? I started on the CME floor, and I want to share with you what I've learned about trading. It's been culminated, over 20 years of my experience, 25 years of my experience into, the last few years when I've been working with individual traders, retail traders, and developing trading software. So my goal for you today is show you how to leverage the information that's generated by the market so you're always trading in the same direction as the market, right? That's what you want to be doing, right? You don't want to always be fighting the market. You're going to find yourself fighting the market. You'll be fighting yourself a lot of times, and ultimately, you're going to lose. And in this training, you'll discover an easy way to learn what's working now for order flow traders. There's been big advancements in the field of order flow analysis, just in the last 5 years, right, compared to how it was 10 years ago. You're going to see new ways of viewing market-generated information, and you're going to discover easy-to-see order flow trade setups that you can take advantage of. Okay, and what makes order flow different is, people think order flow is a fad, and it'll it's just it's a buzzword, for people to get you to part you from their money and teach you some trading things. It's not. Order flow is been around in some form, for well over 100 years, since the days of, Jesse Livermore on, in the 1920s, right? He wrote one of the great books on trading, not just order flow, but trading in general, reminiscence of a stock operator. He was basically a tape reader, which is someone who reads the order flow. Okay, and this training is for serious traders that want to understand what's actually happening in the market. Honestly, if you're here, you're just looking for some red light, green light system, Mike, just tell me where to buy, just tell me where to sell. That's all I'm interested in. This session is probably not for you. This session is for people that want to understand what's actually happening in the market so they can trade. That's what being a trader is. It's understanding the different pieces of market information and putting it together and trading. Now, if you stick around to the end, I'm going to show you how to get a copy of my book, Trading Order Flow, right? I wrote this book after I left the corporate trading world, after I left JP Morgan. And, originally I thought, I want to write this book. This is going to be my contribution to the trading society, to the trading world. I didn't imagine that I would get into developing software, but, what you're going to learn in this book, it's 150 pages, is very valuable information that you're not going to find anywhere else, unless someone copied it from my book. So what makes order flow analysis so powerful is that it gets you as close to the market as possible, right? As close to what's happening right now, trading in the market as possible. And that's really where you want to be. When there was open outcry, the pits trading, people paid a lot of money, locals, to be down there in the middle of the order flow to trade it. So, order flow is very valuable information because it's going to allow you to gauge the tendency that a market will continue in a direction or stop. New trading activity, which is basically volume, is what's going to keep the markets moving in a direction. And by having order flow information, it's going to give you a better picture of what's happening in the market, more so than what other people out there are looking at. Most people are just looking at the open, high, low, close, and maybe volume some of the time. So you're gonna be able to see things that other traders are just not paying attention to. So just really briefly, why you should listen to me. Everyone always says, "Oh, why should I listen to you?" Or, this person is. My name is Michael Valtos, right? And I've got over 25 years professional trading experience. I started on the CME floor as a runner, right? The lowest level you can get started um, in the trading world in those days was being a runner on the CME floor. That's how I got my foot in the door. Now you don't have those opportunities because there is no trading floor. If you want to become a trader, either one, you got to put up your own money, or two, you got to go to some, fancy school and get a degree in programming. All these jobs I see nowadays for, traders and trading associates and whatever at these trading desks. Oh, you got to be able to program in C++, Python, SQL, everything. And, most people, they don't have that. Back in the old days, you could literally come from any background and get a job on the trading floor and learn how to trade. So, the dynamics of learning how to trade have really changed. Getting a job in the trading industry has really changed. So I started on the CME floor with Dean Witter back in the early 90s. And eventually, I worked my way up, on the floor. Eventually, I left the floor when electronic trading started taking off, and I went to the upstairs, what they call the upstairs trading desk at Dean Witter to work the overnight session, the Asian session, European session, and trade electronically, right? Trade on Globex, trade on Project Day, trade on NYMEX access systems, as well as all the markets around the world. I did that for about 3 years, 3.5 years. Then I left and I joined EDF Man in Chicago on their global macro futures trading desk. I spent 2 years there, then joined Commerce Bank in Chicago. I was a licensed Eurex trader, so I traded obviously all the Eurex products, Bunds, Bobble, Schatz, DAX, Euro stocks against the US products. And I spent about 3 years there. After September 11th, I decided I needed some time off. I took about 6 months off, traveled a bit, and was bouncing around. And then I joined Cargill in Chicago. Cargill is the big commodity trading company. They, account for about 30% of the U.S. grain exports, 25% of meat exports. They're in every commodity you can imagine, also in shipping and in, everything in the whole supply chain. I've learned a different facet of the business besides just futures trading. I understood better, the cash market relationships that, the supply and demand relationships that really drive the markets. Okay. Cargill sent me out to Singapore to set up a trading desk when the exchange closed there. The CYMEX closed the floor. The exchange didn't close. The floor closed. SGX went fully electronic, so they wanted me to set up a desk there, a trading desk. So I did that, and then after that, I joined JP Morgan. I spent 8 years at JP Morgan in Singapore as vice president of futures trading. Okay. And this was, it's not some seconded away in some corner office, come in at 9, checking my emails. No, I'd be coming in at 5:45 in the morning to trade the Globex Open, the CME Open at 6 a.m. Singapore time, which was 5 p.m. Chicago time, until till about 5 in the afternoon there, when Europe was open and the European traders could take over our book. But you know what? I was burnt out. I was in my early 40s and, I'd gotten married. We had a daughter. And I said, there's more to life than being in an office all day, and I said, I know how to trade. I could do this for myself. And I left JP Morgan and I started trading for myself based on, what I knew. I'm like, I'm not stupid. I've been in the industry for 20 plus years. I know how to trade. Well, instead of killing myself making money for the bank, I could do this for myself. So in 2015, I released the Order Flows Trader software. Now, I left JP Morgan in 2013 and I just needed some time off to recharge. I started writing my book and trading for myself, but I realized the order flow software out there was okay. It was basic. This was again 2013. Fast forward now we're 2021. It's is that 7, 8 years, and the software that was out there, it was just this basic order flow software, right? It would show you the volume trade on the bid, the volume trade on the offer, which is good for some people. But you know, me, I'm like, I know computers can do more, right? I want the computer to do some of the analysis for me. So in 2015, or sorry, 2014, I started working with a programmer saying, hey, you know what? This is what I look at in the order flow. Put it into the software so that I could analyze um, what's going on in the market. Okay, and 2015 is when we released the first version of Order Flows Trader because people were asking me, hey, what charts are you looking at? Can I get a copy of your software? So it didn't start out that way. Whereas like, oh, you know what, I'm going to become a develop software for traders. It blossomed out of me first writing a book, then me looking at my software saying, you know what, this is not good enough. Now, my software runs on NinjaTrader 8, and people say, is it available for this platform, that platform, this platform, that platform? No, it's on NinjaTrader 8 because that's what I use, right? Listen, I know a decent amount of stuff about computers, but I don't know how to do all the programming and all the stuff that goes on under the hood. I just like to get in the car and drive, right? And NinjaTrader allows me to do that. I have a programmer who's excellent, does a great job, knows exactly what I like in terms of programming. I've been working with him for 6 years. And right now it's just for NinjaTrader. It's not on any other platform. But if you trade futures, you should really look at the NinjaTrader platform. And now it's the order flow footprint chart with 17 pre-programmed order flow analysis tools. Now, the reason I talk about this is because the charts that I'm using in this presentation are generated from the order flows trader software. Okay. So there's two ways to do things. You can do it the easy way or the hard way. I prefer the easy way, the path of least resistance. I want to let the computer show me what's happening in the market. When you're trading for yourself and you're trying to trade multiple markets, because sometimes you have to trade multiple markets because your primary market can be dead, right? It could hardly be moving, and another market is rocking and rolling, and you feel left, I hate to say feel left out, but you're like, gosh, if I just expand my horizon a little bit, I could take advantage of more opportunities. And that's why having software that's going to help you with the analysis is going to put you ahead of everybody else you're competing with, right? You're basically competing with yourself, right? That's your own confidence and discipline as an individual trader. But then again, you're trading against everybody else out there. You're trying to get their money, put it in your pocket. So, like I said, the charts and tools used in this training are generated from my software. But what I'm showing you can be used with other order flow footprint charts if you know what to look for and you know how to set it up, right? You can set it up in Sierra charts, you can set it up in Motive Wave and various other softwares. But hopefully you can see how easily and quickly you can apply order flow analysis to your trading. Now, before I jump in, just remember trading involves risk, right? Nothing is risk free. Stocks don't always go up. That's, sorry, stonks don't always go up. Um, Bitcoin doesn't always go up, right? The market goes up and down, and you got to realize there's risk involved in trading. You shouldn't trade with money you can't afford to lose. So, have you ever stopped and thought about where does the information on the chart comes from, right? It comes from the trading data, what's actually being traded in the market. Charts like this, they're easy to read. You throw a 200-day moving average, a VWAP, you know, but have you ever stopped and thought, why does the market stop at this particular level, right? A lot of times people like to look at a chart after the fact and then reverse engineer why the move happened, right? There's a lot of Monday morning quarterbacking going on in the markets. People say, well, yeah, I see the market, it sold off and it started to rally because of this, we hit this level. Well, as a trader, you're not trading in the past tense, you're trading right now, right? And that's where order flow is going to help you is because you're making trading decisions right now. You're not sitting at the chart after the market's closed and saying, oh, yeah, I could have bought down here and sold up here and then bought again down here. When it's down here, you got to be making a decision. Do I buy or sell? Are we going to bounce up or are we going to continue to go lower, right? That's what traders are constantly faced with are these decisions. And that's where having order flow, having market generated data is going to help you. So, a chart's formed by the time and sales. And it gives you a lot of information. People don't realize, sometimes people don't understand really what they're looking at in the time and sales. And you see there's oftentimes there's different colors in the time and sales. In this case, it's orange and green. Well, I know that if it's a particular color, I know whether it's trading on the bid or on the offer. So if it's red, I know see people are selling into this bid. If it's green, I know people are buying this offer. So I know this area here that's all orange is people selling, right? I know it's trading at 86 and a quarter. Okay, but what kind of trading? Well, it's selling that's going on. And then it's trading 86 and a half. Okay, well, are people buying the six and a halves or are they selling the six and a halves? Okay, well, I know at this point they're buying it. So the market was trading, um, it was selling, it was going down a little bit. It's trading six and a quarter. Then a bid came in, it's trading six and a half. Then all of a sudden, people are still selling six and a halves. Now people are buying six and a halves. So, the market moves back and forth. But the problem is when you're looking at time and sales, it moves too fast, right? You can't make heads or tails of it. Now, out of this data that you see in the time and sales, you can put it into an order flow chart like this, and you're going to get a lot of information, right? You're going to get delta, you're going to get point of control, you're going to get imbalances. And, just really quick what these are, right? Every bar is going to have a delta. It's going to tell you the delta is going to be positive or negative, or could land on zero. Zero just means buying and selling was evenly matched. But if a delta number my software appears on the bottom. Some will put it under the bar, different places. I just find it neater on the bottom. Minus 3,011. I know that in this big red bar here, it finished up minus 3,011 negative delta, telling me there was 3,000 more sellers than buyers in this bar. Like this little green bar here, it's got positive delta of 536. It's telling me there was more aggressive buyers than aggressive sellers in this bar when it closed by a number of 536. Okay, and that's important because it's telling you who's in control of the market, who's in control of this bar, right? And once you start putting these different bars together, looking at delta and some of these other things, you could really get a clearer picture of really what's happening in the market. Now, the next point is point of control. Now, every bar has a point of control. It's the level in the bar with the most volume. It's traded on the bid and the offer combined. Um, Horizontally, at a particular price level. So you can see every bar has a point of control, point of control, point of control, point of control, point of control. And why is this important? Is because, point of control is sort of a crude sense of fair price in the bar, where the most transactions occurred, where, the big traders transacted. Now I'm going to take this a step further a bit later so you can understand it even more clearer. Now, imbalances. Some bars have imbalances, some bars have none. You'll see in the bar, there's red numbers, there's blue numbers, there's black numbers. Black numbers are just your normal order flow that's going through. When you see red numbers in the volume in the bar, it's telling you you have an imbalance in the two-way auction. So you could see in here, right, 53 traded on the bid against 2 on the offer when the market was bid at this price, offered at this price. In the two-way auction, 344 versus 1, right? 373 versus 44, right? Markets trade in a two-way auction. It's a bid and an offer, right? It's bid like at one price and it's offered at the next higher price, okay? That's why when you're looking at imbalances, you look at it in the two-way auction. And you see the blue here, 58 against 303, right? There's 58 sellers against 303 buyers. This is an imbalance. Now, how do you figure out imbalances? Well, you could set your threshold. Most traders use 4 to 1, which is 400%. Some traders use 3 to 1. Some traders use 10 to 1. It really depends on your trading strategy, how you want to use imbalances in the market. Now, like I said, most traders use 4 to 1, and you know what? That's a good starting point for most traders. I use 4 to 1 on most of my charts. Now, all that information on that footprint chart, again, it comes from time and sales. Other people like to think that order flow is looking at the depth of market, right? The price ladder. Well, the price ladder just shows you the bids and offers, and that's constantly changing, right? I mean, people are putting in offers, pulling them, putting in bids, pulling them. you really what you want to be focusing on is what's actually trading in the market, not necessarily the intentions of traders. Now, it's nice to know, areas of liquidity. Is there a big offer someplace or a big bid someplace, or very little on the offer or very little on the bid. But in general, most of the time, the order book is pretty normal. Okay. Now, remember, the information you see on your bar chart comes from what's traded in the market, from what you see in the time and sales. But what's the candlestick chart lacking? It's lacking volume, right? Volume that traded on the bid, volume that traded on the offer. That information is very valuable to a trader. Now, again, like I said, the software that existed for order flow trading just wasn't good enough or complete enough for me. I don't want to say good enough because I was trading using it for years, but I created my own because I wanted to take order flow a step further than just looking at delta, point of control, and imbalances, right? I know that there's other pieces of information to be had out of the order flow, right? I wanted to see beyond the delta, the point of controls. Now, in this latest version of the order flows trader, I can see the value area for a bar. I can see where traders are trapped in the market. I can see where there's market exhaustion. I can see where there's point of controls that matter, right? We call them prominent point of controls that act as support and resistance, and so much more. Okay. Now, like I said, the order flows trader's got 17 pre-programmed tools inside of it to help you understand the order flow better rather than just looking at delta, point of control, and imbalances, right? I mean, a lot of the software that comes out, they're still just showing delta, point of control, and imbalances, whereas traders are more advanced than that, right? And you should be asking yourself, as a trader, what do you want to be trading with? Something from a Model A Ford, or the new Ford Mustang, right? You want to be trading the latest model, that's going to give you high performance and give you more information that's available to you, right? Now, trading the market, right, it's just not about watching price movement. There's different parts of the market, and they're always moving, right? You have to be using them. Looking at price go up and down is not really giving you a full story of what's going on in the market, right? If you're just looking at price, you're just looking at one market perspective, right? You have to integrate other information that the market generates. So why are you here, right? So you want to learn what's traders are using now in the order flow, right? You want to see how you can view the market generated information, and you want to see how you could use this in your trading. So trap traders, right? Everyone has heard about trap traders, right? Traders who are caught offside in the market, right? We've experienced it all, right? We know what it's like. Buy the dip, BTFD, it's just, it's becoming part of our vernacular now, buy the dip. Well, sometimes the dip just keeps dipping, right? Just keeps going down, right? You're thinking, oh, this market's going up, oh, or dipping, I'm gonna buy it. I'll buy some more. I'll buy some more. Next thing you know, you're falling off the cliff, right? That's not necessarily good trading strategy. If you're looking at the order flow on a footprint chart, this dip here, right? This is the footprint chart for that bar chart I just showed you. You're probably not going to be buying this dip. Why? It's because you're not seeing the type of buying that you want to see, right? You're seeing more aggressive selling than buying coming in. So buying this dip, you're going to be sitting, yeah, I probably shouldn't be buying this dip, right? Or at least not buying yet, all right? It's not about getting, being in and out of the market. It's keeping you out of markets you shouldn't be in, or keeping you out of positions that you shouldn't be in. That's what trading is. It's not just sitting around, okay, boom, I want to get in, now I'm a trader. No, part of trading is staying out of market conditions that the market is telling you to stay out of, right? Here's another market, right? That previous one I showed you, that was euro currency. These are charts from yesterday. Okay, all these charts are from yesterday. There's a question there if I could show crude oil. I think I got some crude oil charts in here as well today. Because there was a big sell-off in the crude yesterday late, and order flow gave some nice clues. Now this is gold. Okay, this market just appears to be doing nothing, right? Just going sideways, and then it falls over, right? It falls from 1806 all the way down to below 1800. Okay, well, what are the clues, right? That's where you're going to use order flow to help you understand what's happening. This is wheat, right? Wheat, it's a grain, a pretty boring market to a lot of traders, but sometimes boring is good. I see a lot of traders, and it has me shaking my head sometimes, is people say, you know what, I can't make heads or tails out of this order flow, and then I'll ask, well, what market you trading? And they'll be like, NASDAQ. And I'm like, well, problem is you shouldn't be trading NASDAQ, right? The market's too volatile for you, especially if you're a new trader. I know people that are killing it in NASDAQ, but they're experienced in trading. They understand the risk involved and how to deal with it. Most new traders can't handle the risk involved in trading NASDAQ. So that's why I say look at other markets, right? That's why I show different markets here. So you could see, that there's more to trading than just trading NASDAQ, SPASDAQ as people call it, because it's all over the place. Wheat is a great market. It follows order flow nicely. A lot of markets that are supply and demand driven, right? Cash settled markets, like obviously the grains, bonds, that have a lot of institutional participants tend to follow order flow a bit better because they don't have that hot money, the retail herd money coming in like, oh my God, everyone just rushes, all the retail traders rushing to buy or rushing to sell. Markets that move more methodically sometimes are easier to trade for people. But this is wheat, right? It looks like it's not doing anything. It's sort of just grinding higher. I know a lot of people that would be short and just, still staying in the short as this market is just slowly grinding higher, right? But if you know how to read the order flow, you know to either, if you're short, to get out, or if you're not in position, you could take a nice low risk trade here. And I'm going to explain that to you. So this was the dip, right? The first one I showed you, buy the dip. Market's starting to sell off, buy some more. Selling off, buy some more. Well, if the market's continually dropping, why are you going to be buying more, right? Now, there's a tool that we have in the Order Flows Trader software that shows you trapped traders, right? Right here. I'll put an arrow above the bar. So again, what's a trap trader? Someone that's long and wrong, right? Someone that's short and in the hole, right? They're short, thinking the market's going lower, but the market's reversing. They're short at the bottom of the hole, or they're long and wrong. Most people think that all trap traders have to appear at the high of a move. No, a market could be going off, putting in a little rally. Traders get trapped, right? When traders are trapped, now that doesn't mean that, oh, all these buyers here is 39, there's 7, whatever, there's 30 here. These guys are all trapped. That's causing this move down. No, really what it is, it's a sign that there's bigger forces at work in the market, because you're only looking at, what is this, 80 contracts, right? 80 contracts right here is gone already, but the market's going down. Trap traders is a sign of um, people's thought of the market going in a direction, and they're wrong, right? The retail aspect of the market is wrong. Okay, again, this was the gold chart, right? It looks like it's going sideways, right? You see this type of chart a lot, but what you're looking for is a clue in the market. Trap traders in here. Okay, market rallies back up to that area where the trap traders were before selling off. Again, this is that wheat, right? It just, this red line is the low of the day. It could go either way. It could just sort of grind higher or maybe reverse and sell off. But if you're looking at the order flow in here, right? I know, because these are my tools that I use, that there's trap traders here, trap traders in this bar, right? And you can see how this market pops up. And people say, well, it's not that big of a move. It's about being consistent, right? It's not capturing a 50-point move in the S&Ps every single day. It's about, successful. There's a lot of successful traders that just grind it out. These guys that always hit the home runs, they're no longer in the market. Either they blew up, or they had a heart attack or something. The guys that grind it out, Ichiro Suzuki, the baseball player, is playing for, in his 40s. Guys like Mark McGwire, these power guys, they tend to retire a bit earlier when the drugs wear off, so to speak. But it's like, having tools that are going to help you read and analyze the order flow is going to put you ahead of a lot of other traders. Now, honestly, I used to read the order flow and see this happening, but as I progress, I'm like, you know what? This is what I look at in the order flow. Why not put it in software? Okay, that just show me. That way I could have more opportunities, so to speak. I could be looking at more screens, more charts, and find these opportunities. This is bonds yesterday. Look at that. Right off the low of the day, nice rally up in the bonds, start coming off, boom, back down to the lows of the day, right? Now this is, crude oil yesterday, right? You had that nice little late sell-off here. Boom. It was about a $1 move in the crude. Okay, what's the signs, right? Well, you have trap traders here. You actually got a few more um, in here, which I'll get to a bit later with when I start talking about value going on in the bars. But I know that there's trap traders going on in here, okay? And if I know there's traders trapped in here, right? Again, I'm not looking at, oh, there's 100 traders that were long and wrong here because, that's causing this move down. No, everyone that becomes a buyer is going to become a seller at some point, right? Is what they always say. But yeah, okay, maybe they're covered here. Well, they're out already in here. Okay, that's not causing this move. But I know that the sentiment has changed, right? I know that what we're seeing some buyers that were active in here thinking this market's going to go back up, but the market's telling them, nope, not now. We're not going up now. But again, if you're not looking for trap traders, you won't be a trap trader, right? I mean, we've all get stuck in the markets. And, if you're not looking for trap traders, you can't see where traders are trapped, right? So you're going to be, what's the point? Well, you got to be asking yourself, is this something I can use in my trading? And yes, it is. I know people that built whole trading strategies just around trap traders, right? Again, I'm talking about different things here in the order flow. Now, I'm not saying you have to learn every single thing there is about order flow. No, you develop a trading strategy around one form of analysis that works for you, that you can get your head around. Because if you try to apply every single thing about order flow at once, you're going to be overwhelmed. It's like trying to drink through a fire hose. It's just too much. It's overwhelming for people. So the next thing I'll talk about is value, right? Most traders have heard about value, usually through market profile or volume profile. And, we're always comparing price relative to value, okay? And, the volume profile, most people are familiar with. We know how a market theoretically should act around a value area, high up here or, a point of control or value area low in here. Okay, and that's all well and good, right? Now, understanding where the value is for the day is valuable information, right? We all like, most traders will have some sort of profile up on their chart, but an individual bar has a sort of own ecosystem of what's trading on that time frame, right? An individual bar, whether it's 5 minute or 1 day or a 1 minute, a 10-second chart, it goes up and down in the bar, right? And really what is a daily chart? Well, it's a collection of smaller time frames. A daily chart can be a bunch of 5 minute charts put together, or bunch of 5 minute bars put together, right? Just as a 5 minute chart is a collection of 1 minute charts. Okay, like a 5 minute bar is made up of five 1 minute bars. But the same analysis that you perform on a daily chart, you perform on a 5 minute chart or even a 1 minute chart. And you're going to do that whether it's order flow, whether it's um, technical analysis patterns, the head and shoulders patterns or, A, B, C, D, bats, all sorts of stuff, right? Whether it's a 1 minute chart or a 10 minute chart or a 15-minute chart or a daily chart, right? That's how you can tell if a form of analysis is good, is if it can be transferred over different chart types and different markets, right? If you have a way of trading that only works for one particular market, it's probably not going to, it may work in the short term, it may have worked in the past, but its longevity is probably going to be very short, right? Ideally, if you're looking at trading, you want to have some method of trading that's going to survive in the long run, right? Now, value, right? Every bar, again, I talked about point of controls earlier, right? You can see the footprints in here. but every bar is going to have a value area. Now, people say, well, yeah, you can have a volume profile put on a bar. There's a lot of different ways you can do it. Different softwares now have different capabilities. But again, if you don't know what you're looking at, it's not going to be very effective and useful for you. And these are just bars, plain bars with no value areas, right? These are just your normal order flow footprint charts, your point of control, your delta, your imbalances. Okay, well, that's all well and good, but as a trader, I want more value, so to speak. I want the software to do more for me. So when I had my software developer put, hey, I want to know the value area for a bar. I want to know particularly the value area high is obviously going to be the top. The value area low is going to be the bottom. Obviously, the point of control is going to be usually the same point of control in the bar because that's information for me, right? Because I can decide, like I can see here, okay, well, value is it's overlapping here, right? We're going sideways, obviously, but value is coming in here at basically around this 05 to 10 area. Okay, then we start trading lower. We got more overlapping volume. Trade a little bit lower, more overlapping volume. At this point, I'm not looking for this market to start rallying because I have this value area forming in here. I got another little value area forming in here. I've got another lower value area forming in here. The bias obviously is down. Now there's people that are going to want to try and buy this, and say, oh, I got green, green, green. I got to buy it. But when you start looking at these bars, even these two bars here, even though this is a green candle, the value area is lower than the previous bar. Value area high is lower than the previous value area high. The value area low is lower than the previous value area low. Okay. Obviously, we can't even get, when we trade back up into the value area of just a little bit earlier, we go in, we reject it, we come off. So again, there's absolutely no reason to be getting long in here. Instead, you have a nice value area forming in here, a lower value area here, a lower value area here. Value area is migrating lower. The bias is to the downside, and then boom, it just dropped, $1. Now here's E-minis yesterday, right? We had this nice little rally up, we had a big sell-off, then we had a nice recovery. But you can see here the value areas. Again, you're forming a value area in here, a slightly higher value area here. You have this gap in here, then another as you're going higher. And then you start adding some of the other tools of analysis. We say, yeah, at the bottom here, I got some trap traders. I got trap traders. So I know that value is moving higher, right? In these bars, this sort of grouping of 5 bars is higher than the previous 5 bars. It's giving me a clearer picture of what's happening in the market. Now, every bar has a value area, okay? And that's good, right? But you could take it a step further, right? You could do analysis of value areas. And what we've realized is some value areas have more meaning to them. We call these EVAs, sort of expanded value areas, as opposed to the normal value areas. And if it's bullish, it will color the value area blue. If it's red, or if it's bearish, it'll color it red. Okay. And if it's just gray, that's just your normal value area. Nothing too special about it. I mean, there are other forms of value area analysis, but in the software we have what we program called the EVA, which is going to give you a bullish signal or a bearish signal. Then you start combining it with other things, right? You see the trap traders, you see obviously the imbalances. Again, so you're rallying up here, you're putting in this nice rounding top, start coming off, bearish EVA, you got trap traders, and again, there's absolutely no reason to be getting long here. It's all, buy the dip, buy the dip. Well, you're gonna get run over, right? There's absolutely no reason to be buying, and the market, boom, it just drops off the cliff. And this was the E-minis I was showing you earlier with the trap traders. But you can see in here the expanding value area is getting bigger and bigger, right? That's bullish. And, you add it into, I haven't even talked about delta in here. I just talked about trap traders earlier. So you can see just using these two tools together is going to give you some, nice trades. You get long in here in this next bar, 46. You got an 8, 9 point move over the next 10 minutes. This was gold yesterday at the low, right? You got this nice EVA coming in off the low, right? It's covering this one, covers this, most of that, and boom, all the way up from 96, 97, all the way back above 18 bucks. Actually, we did go higher, but this was on a bar chart. Can you see value areas on the bar chart? Everyone always says, "Oh, this is a pin bar, right? It's very bullish. It's the best trading signal in the world, right?" I grabbed this off some website last night here. The textbook pin bar, textbook bullish pin bar. Well, it failed, right? The textbook examples, it fails. The thing about candlesticks, I like candlesticks, I'll admit. When they work, it's easy to say, well, yeah, that worked because you had a bullish pin bar there. And oftentimes you don't realize it until after the market puts in a move like this. But like I say, you got to be trading in the present. This was that bar. This was that order flow right here, right? The bullish EVA. You can tell what's happening on the order flow, right? You don't need to sit here and look at a candlestick chart and not know that. You can know it. This low is the low to buy, not this low here. Buy the dip. Okay, you bought here. It went dipped lower, right? This is where you should be buying in here. The signs are all pointing in that bar right there on the low, the EVA. Again, there's also bullish information in the delta in the next bar, and actually the next several bars. But you should get the idea now. Back to wheat, right? Again, market just looks like it's dead in the water, doing nothing. Just hemming, just chugging along, going sideways. If you have the value areas on, okay, maybe if you understand value areas a lot, you can make heads or tails of it. But if you have a tool that's going to highlight to you, say, hey, you know what? This one is very bullish here. It's worth getting long. Where do you get long? You get long in the next bar. Where's your stop go? Just below the low of this value area. Okay, so you're getting long what, 62 and a half. You have a stop at 61 and a half. It's a 1 cent stop. It trades all the way up to the 5.5 just over the next few minutes. Right? It's not one that's just trudging along doing nothing and then makes a move. It's, the best trades are the trades that work out relatively quick. That's what I like order flow, right? That's why I prefer to day trade and go to cash at night, especially with these volatile markets. Um, you sleep better at night rather than, wondering what's going on in the markets. Again, this was that wheat, this was that area I was just showing you right here. Okay, right in here, this low. Is there any reason to be buying? If you're looking at this chart, people say, well, you got a double bottom here. Well, yeah, a nice quintuple bottom here. Okay, well, sometimes they work, sometimes they don't work. But if you have something in the order flow, if you're already looking at this chart saying, yeah, you know what? Okay, we're down here at the bottom, but I got something bullish in the order flow. It's going to give you a much better trading opportunity than just sort of saying, well, I've we hit the bottom here, tested it again, start going up. And the way most people would trade it is, I know that this bar here is bullish in the order flow, okay? But if people are trying to trade a breakout, they're going to like measure it here, put the, get long up in here. Order flow, I know it's bullish already. I could be getting long immediately, right? I don't need um, to wait and wait and wait. Now NASDAQ, again, the SPASDAQ, this is MNQ on a 2500 chart, 2500 volume chart. I was trying to figure out, honestly, it looks the same. 2500 volume chart is very similar to a 30-second chart. Again, this is, it's scrunched because it covers so much ground, NASDAQ and micro NASDAQ. So you can't really look at the numbers, but the point is I'm not talking about the numbers, I'm talking about the value. Where's value? What's value doing? Okay, if you add value areas, well, you can see value areas going higher as they're moving up, going higher as moving up. As the market's moving down, it's going down. Value areas migrating lower, migrating lower, migrating lower, migrating lower, migrating lower. But if you take it a step further, have a tool on your software that's going to highlight to you bearish value areas or bullish. In this case, these are bearish ones because they're colored red. You could catch these moves as soon as they develop. You know, market went up, you got a bearish value area up in here. Imagine you're getting short somewhere in here, 50, 55 even. That's a move. It's a 50-point move, actually more because it went all down to about 60. But just this move over, from 1037 to 1045, not even 10 minutes, that's a 50-point move in the Nasdaq. Right now, you know, it's not always as beautiful moves as that. I mean, yesterday was an extraordinary day in the markets in terms of the way the market movement went, but you can see how better and easier it becomes to trade order flow when your software does analysis for you. Like I said, I know a lot of people, they get order flow charts and they start looking at this. I don't understand what the hell I'm looking at in here. But if you have tools and software that's going to highlight things to you, it becomes a lot easier, right? Trading becomes, I'll say automatic, but you understand what to do much better, right? When you add order flow to it, it's good, but take it a step further and add order flow to it that you can understand, the analysis that you can understand. You know, we humans tend to make things more complicated than they really need to be, and it's, my wife, bless her, I love her, sometimes she overcomplicates things. Okay, so let's just calm down, strip it down. Let's take a look at something and analyze it and not overcomplicate things, right? Read the instructions, so to speak, right? And having software that analyzes order flow is like having instructions on how to read order flow. So the last development I want to talk about today is order flow sequencing, right? The order book, right? The depth of market shows the best bids and offers, and it's constantly changing. But what I have found is it's better to dissect the trades that occurred instead of the bids and offers that keep changing, right? Trying to look at the bids and offers that are always changing is going to give you a headache, right? Trying to make heads or tails, and especially nowadays, the way the market's trading over the last several years, the order book just moves too fast. You can't make anything of it. So what I found is what we call order flow sequencing, which occurs when a buyer buys larger amounts on the offer at each level, or sells larger amounts on the bid as the bid's going down at each level over a sequence of prices. That's why it's called order flow sequencing. So which do you think is more important, the time in sales or the depth of market? Well, time in sales is actually what's trading on the depth of the market. And what you see in the time in sales is what goes into the chart, right? What goes into the chart construction, not the depth of the market. The only thing in the depth of the market that goes in is what's traded in the middle, right? When bids and offers are crossed, and that shows up in time in sales. Charts aren't made out of the depth of market. Now, don't get me wrong. There are people I know that will watch the depth of market, the price ladder, and can make money at it. They're very good at what they do, but it's not for everybody, right? It's for that select few that can think in that way, okay? And not everybody has that ability. I don't have that ability. Sometimes I think, oh, I see something in the depth of market. I got something I could lean on. You watch these training videos. And honestly, I've watched the depth of market since electronic trading started, right? I used to have the actual native terminals from the exchanges with the depth of market, right? So I understand, I've looked at it my entire life, my entire trading career. But even you would think I should be a master at it, but I'm not, right? Because people play games in the depth of market. But once it trades and it prints, that's there. It's for all eternity. It's for everybody to see. It's printed. So order flow sequencing occurs when the market eats through bigger and bigger size on the way up through the order book when the market's moving up. Now, when the market's moving down, it's got to eat through bigger and bigger size through the order book on the way down. Now, trying to see this in the order flow with the naked eye is hard. You have to train yourself to see it, but computers make it a lot easier to see. And you can see here, right? This is your footprint chart, the order flows trader footprint chart. This is crude oil. I got some sequencing going on here. That's why this blue area in the bar. blue area in the bar, blue area in the bar, right? As the market's going up, right? So you know that, there's good buying going on in the market, right? Good buying going on in the market, right? So how does that help you as a trader? Is because you know that the market has to, the people are trading, but really who moves the market? Well, it's the big traders, the traders that have a lot of size to execute, right? To get filled in the market. And having a tool that's going to help you see where that's happening is going to put you ahead of other traders. Traders that are just looking at a normal footprint chart and looking at the bids and the offers. Okay, fine. Honestly, that's where, working with traders, trying to explain to them, you don't have to, sometimes traders get so caught up trying to analyze every single tick that goes through. You don't have to. You just have to analyze the ticks that give you something actionable, right? Here, right? The same, this is the E-minis. This is what, a 30-second chart, right? This is the chart with sequencing off. This is the chart with sequencing on. Actionable, actionable. This is bearish sequencing. This is actionable, right? As the market's going down. Bullish as we start going back up, right? Now, this is Euro currency. Okay, so what? Right? Yeah, I got bids and offers. I see buying imbalances. Well, if you could add a little something extra, sequencing, you can see how the market has to eat through levels, right? What's going to cause a market to go up or what's going to cause a market to go down is aggressive trading. Aggressive trading, aggressive buying particularly is what causes markets to move up, is people lifting the offer. And if there's more and more volume on the offer, whoops, let me go back here, all right, that it's got to get through, it's harder for the market to get through. So if it could get through that, chances are it could go higher. Just as if a market is going to start selling off, it's got to have aggressive sellers selling into the bid. But if the order book is stacked, right, meaning more volume, more volume, more volume, and the market just chews right through that, what do you think? What do you think is happening in the market? Do you think the market is stronger or weaker? Well, chances are it's going to be stronger because it had to work harder to get through a level. Okay. This is crude oil yesterday, right? Crude oil, we had a nice sell-off, a nice rally, a nice sell-off. Crude oils is, I think crude oil is going to be having a big bull market run this year. And, so if you're going to be in a bull market in crude oil, I think it's going to be a nice market to trade because I think it's going to have a lot of trading opportunities. And if you're looking at the order flow, right, you want to take advantage of those opportunities. So here it is, right? Bearish sequencing, bearish sequencing, bearish sequencing, chewing through these levels, chewing through these levels, chewing through these levels. Now, honestly, the first level or two sometimes might not be much. Here's 8, here's 6. But as you subsequently get through more and more levels, that's important. Now, don't just go out and start trading every order flow sequence that appears. You have to put it in context of the market, right? You should always be trading in context of the market. Okay, sequencing on, right? Crude oil again on the move back up here, right? The move I just showed you here was the move down. This was at 830, 850. You start moving back up. Bullish sequencing, bullish sequencing, bullish sequencing. It's market is working to get through levels, right? That's what you want to see. If you're looking at a normal candlestick chart, you're not going to see that, right? You're not going to see sequencing. You're just going to see a market selling off, right? You're just going to see a market rallying. That's why having tools that is going to show you what's happening in the order flow is just going to put you so much ahead of everybody else, right? Buy the dip, buy the dip, buy the dip. You bought the dip, next thing you know, and what you screw it, I got to get out here 60, 80. And then boom, market just comes right back up, So buy the dip. It's all nonsense. Just trade what the market is telling you to do. Simple. So hopefully you can see now how order flow just blows up a normal candlestick chart, right? Just blows it away. There's so much information. Honestly, what attracted to me to order flow years ago was being able to see who's in control of the market, to be in sync with the market. To me, that was the most important thing, is being in sync with the market. I don't want to be caught off sides. I don't want to be doing zigging when I should be zagging. Right? I don't want to be long when I should be short. right? That's order flow keeps me on those right sides. I want to know why the market stops and reverses. So what I just showed you can be done by looking at any footprint chart, but honestly, you need to know what to look for and when to look for it, right? Because honestly, when the market's moving, especially like yesterday, when the market is down hard, it's even easy to overlook and miss things. Let your software do the heavy lifting for you. Order flow is about understanding what the traders are doing in the market. Process this information that you see here easily. All right, don't make trading so difficult that you can't understand what's happening. It's like taking all this information, all these puzzle pieces, and you're trying to put it together. But if you ever try to do a simple puzzle, those puzzles, with the pictures, and put a timer, I'm going to time myself. You're going to start to panic, and that's what happens to a lot of traders trying to understand what's happening in the market. Is they can't process it, and then they start breaking down and panicking. Now, this past hour, hopefully you agree it's been time well spent. Hopefully you've learned something that you can take and use in your trading. Now, I can't cover everything in a 60-minute training session, but I've got a special offer for you so you get everything you need to know about order flow. Well, not every single thing, because there's always new things being discovered in the order flow, right? I mean, that's the beauty of the markets. There's always new areas to sort of go down. I always use the term rabbit holes, but honestly, I think my trading has improved more over the last 5 years by working together with other traders. Because honestly, working in a bank, working at JP Morgan, even Cargill, a big commodity trading firm, you're taught to trade a certain way, and you're around really brilliant people. Don't get me wrong, but you know, there's a certain amount of groupthink that goes on there. But working with other traders really opened my eyes, especially trying to explain things sometimes to traders. Again, years ago I thought I knew everything about the markets, and that's when I realized I don't know anything, or not anything, but I don't really know everything. Nobody knows everything about the markets, but working with other traders on the retail level and trying to have to explain to them order flow helps me see order flow in different angles, right? Because I'm trying to explain something this way, but then I just realized, if I just turn it a little bit and then explain it, it makes sense to them. But as I'm turning it, I'm sort of seeing a different facet of order flow. So I got a special deal for you guys, and it's the Order Flows Trader 3.0 software. Okay, and it works on NinjaTrader 8. I explained it. NinjaTrader 8 is fine. Most people, it's got low. If you're going to buy NinjaTrader 8, the software does work on the free version. So say, you don't want to buy the paid version, you're trading through another broker, you don't want to trade through NinjaTrader, you could use the free version of Order Flows Trader. And it comes with 17 pre-programmed order flow tools. I talked about the value areas, which is programmed in here. I've talked about trap traders, which is programmed in the software. I talked about order flow sequencing, but there's, what is that, 14 other tools in there that I haven't even talked about today. And you can see I've gone on already for almost an hour and a half. I'm only talking about 3 of the tools, showing you how that can help your trading. Now, it's an easy setup. Just takes about 2 minutes to set everything up. You don't need templates. That was the thing that always killed me about a lot of software, because I've tried all the software out there for the most part. Some of them are so difficult to set up. You just want to take your computer and throw it out the window. That's one of the reasons why I like NinjaTrader. Maybe I'm a little bit used to it by now, but Order Flows Trader 3.0 is just very easy to set up. Once you have NinjaTrader set up, you just import it in there and boom, open a chart. Maybe you don't like the colors of the background, you change it. Fine. Okay, it takes about 1-2 minutes to do all that. Normally I sell it for $8.99. Actually, the price is going up next month. And really what it does is it takes, the Order Flows Trader 3.0 takes my knowledge, my 25 years of trading at institutional levels with order flow, and puts it into a program so you can see what institutional traders are doing and thinking in the market. But I realize having order flow software is one thing. You still got to know how to use it, right? There's no point in buying expensive softwares and not understanding how to use it. We've all bought software and not ever used it because the learning curve is too hard. But I provide a lot of education on how to trade with order flow. Now, there's a lot of people sell order flow software out there. And then they want to charge you to teach you how to use order flow. Well, what's up with that? I mean, it's kind of pointless. It's like, well, I want to sell you this car, but if you want to learn how to drive it, you got to pay me more money. Well, well, I'm not going to buy a car like that. Now, I have a course. It's called the Order Flow Trading Course. It's been copied by other vendors out there, honestly. It's 15 hours of video instruction, right? It's 20 lessons. Well, normally I sell this for 297. A lot of these courses that you see out there, I'm the first one that developed them. A lot of people have been copying a lot of their stuff from me. Okay, maybe you want to try and buy it cheaper. Why not just get it from the source? Now, I'm going to also give you access to my Inner Circle video series. Now, a few years ago, I had an Inner Circle, and we recorded over 56 videos on advanced order flows, tricks, tips, and analysis, things to look for in the order flow. Normally I sell this, just the video series, the Inner Circle, the join was a lot more expensive. But the video series, if you want to buy it separately, is $497. I want to give you that also for free today. So the software, the training, the video series, together, that's almost $1,700. That's $1,693. But again, it's one thing to learn from a video. We've all sit down, I watch videos on YouTube on how to make things or how to cook things. But until you actually get dirty and do the work, it's different, right? And trading is the same way because you're always going to have questions that come up. And if you're just watching a video, you can't ask a question. So that's why every Tuesday I do a live group training session. Now here it says there's 92. It's actually up to 107 now. I don't know why I have 92 there. But after I do it every Tuesday night, 7 to 8 p.m. Central Time, where you can come in, ask questions, about any market or about something about the software, anything. I'm there for you, right? And if you don't have any questions, I just go on and start talking about what I saw interesting in the order flow over the last week. Okay, and if you can't attend, that's fine. I show you how to get the replay. I have the replays all up in a spot here for people. You can see the last episode. Well, actually, it was yesterday night. I haven't uploaded it yet, but this is session 109. Some people want to charge you $200 a month for something like this. I'm not going to get into names, but I know companies that out there want to charge you for extra training. Why? You bought the software. It should come with it for free. So you start adding all this up together, it's already, $1,800 minimum. But you're not going to pay that. It's just a one-time payment of $749. Again, it's going to go up next month. I guarantee you that. I know that for a fact. It's going up. Again, I'm not trying to scare you or anything, but the time to get it is now, right? You just go to orderflows.com/oft3.html. I'm going to tell you what I'm going to do is I'm going to put it in the chat, okay? So you can see, just go to www.orderflows.com/oft3. And what it's going to do is it's going to take you to the page to buy it. But this is what other people have been saying about the software, right? Mike, your order flows trader software is remarkably helpful. I can see clearly now what's really happening in the market, right? This guy says, Ziad, if you really want to trade properly and understand what on earth is happening in the markets, order flow is the path. And with Mike's experience and explanations, it clicks, right? So go to www.orderflows.com/oft3. This is what the page looks like. Scroll down the page, right? It's a long page. There's videos, there's charts. And if you want to get in now, just click this button. Click here to buy now. Boom. You click that button, it takes you to PayPal. PayPal processes your information. I don't see that information. I just see your name, your email address, and your address. I don't want your credit card information. It's handled by PayPal. And it's just a one-time payment of $749. There's no recurring payments, anything like that in the future. Some people want to lead you to death, for $200 a month, $199 a month, forever, right? That you try to cancel it, you can't cancel it. You even close your bank account, close your card, and you're still getting charged. I hate that, and I don't want that for you either. It's just a one-time payment, right? Now you do have to pay data fees and NinjaTrader fees. That's not through me. I got nothing to do with that. Those are just cost of doing business fees. So you got several options. One, you could do nothing, right? Stay right where you are now, basically go nowhere. Or two, you could take what you learned today and try and do it on your own. There's nothing wrong with that, right? Trial and error for a few months, and then perhaps if you're lucky, you start to see some positive results, right? But you may not realize that you're doing something wrong or there's an easier way to do things, right? Or option three is you take my hand and allow us to walk you step by step through each process, through each step of the process and skip the trial and error, right? If you do the work, again, trading takes work. It's not something where it's just going to turn the markets, your computer into an ATM machine. Trading does involve work, right? That's why, when people say, well, what kind of results can I have? Well, everybody's different. Some people are going to put in work, some people are not. Really what you want to do, if you want to put the ball in the back of the net, you got to do the work. You got to work at it, right? The great players practice and work at it till they become consistent and become successful. So you got to figure out which option is for you. But before you do, you got to figure out what motivates you. You want freedom. For me, trading is freedom, right? It gives me the freedom to go where I want, do what I want, be around who I want, right? This past summer, my wife says, hey, let's go to Mount Rushmore. Okay, fine. Let's go next week. Okay. That's the freedom. If I'm working in a job, a 9 to 5er, it's difficult to do that. You got to plan, how many months in advance, tell your boss, I want to take this off, and he's got to approve it, all that stuff. If you're trading for yourself and you're good at it and you're successful, you have freedom, right? You have freedom to say, you know what? I don't want to work next week. I don't want to do anything. I want to veg out. This past week over Valentine's Day, I told my wife, let's go down to the city. Let's just stay in a hotel for the weekend and just do nothing, swim, get massages, do whatever, just be waited on. That's what you can do. That's what trading gives you, that freedom. Now, since you stuck around, this has been a long presentation. I got a special bonus for you. It's called the Order Flow Playbook. All right. And normally I sell this for $297, but you can get it for free today when you pick up the Order Flows Trader 3.0. Right? And there's actually about 10 setups in there, 10 or 11 trade setups that you can use for your trading, right? On finding particular things in the order flow. So you got to get started now. Go to orderflows.com/oft3.html. Make sure you put the .html at the end. Okay. That's the link. I put the link in the chat. Now, what you're going to get the Order Flows Trader 3.0. Which normally sells for $8.99. You can get the Order Flows Trading software, Order Flows Trading course, which is normally $297. You get access to the Inner Circle video series, which is $497. You get access to live weekly group training, which is, I don't know if you were to put a price on it, $200 a month minimum, right? People ask me to train them, and it's expensive to train them, right? And honestly, this is a way I could reach more people live at no cost to you guys, right? Because honestly, if people come to Mike, can you train me? Yeah, okay, this is what I charge. It's quite expensive. It's about $200 an hour, but it's that's one-on-one. Now this is time I put aside for you and everybody else that has the software. That anything, say you sent me an email, I didn't respond. You can come here, ask me in that weekly group training. I'm there. Honestly, I get hundreds of emails a day. I tried my best to get through all of them, but sometimes they go to spam for whatever reason. Sometimes people send me screenshots that are so big that it gets filtered out and I don't get the email. But if you're in the weekly, you just come into the weekly group training session, you can ask me a question there, right? It's a time to interact with me. And you also get the Order Flow Playbook, right, which is also about $297 if you were to buy it. And you get all that for just a one-time payment of $749. So go to orderflows.com/off3.html. Now, if you want my book, go to orderflows.com/book.html. Again, you gotta make sure you put the .html on everything. You get to this page. You can see here, this is the link, orderflows.com/book.html. Enter your first name, your last name, click submit. That's it. Okay, you're gonna be added to my list, and whenever I do special trainings or I got special offers, you'll be alerted to that. So go to /auth3.html to get started. Again, you got to get started in life. A lot of people just, oh, I'll put it off. Honestly, we're coming, it's been a year since we've been on lockdown here in Illinois on COVID. And, I remember riding my exercise bike thinking, oh, this is great. Being on lockdown, I can get a lot of stuff done. And I sort of look back now, I'm like, you know what? I got a lot of stuff done, but I didn't get everything that I wanted to get done. So, in life, you got to get started on things. And if you put it off, a year's going to go by and you're going to realize you're not where you want to be. Okay, so I'm going to take a look at a couple quick questions here because I do see some questions. Um, does it work with Apple? Well, it would work on a Mac, but you'd probably need the Parallels software to run it because NinjaTrader runs on on a normal PC, so you'd need the Parallel software. And is it a one-time payment? Yes, it's a one-time payment. Can it be used on TradeStation or Thinkorswim? No, it runs on NinjaTrader, but you could get the free version of NinjaTrader. You could get quotes for a low price. What you do is you open an account at NinjaTrader brokerage and say you want to open a micro account, you put down $250, then that allows you to get the quotes for, very low fees. And then you just execute through Thinkorswim or TradeStation. But again, our software runs on NinjaTrader 8. Will there be a replay, or can you send me this webinar? Yeah, we'll be sending out the replay later. Trap traders, what indicates on your chart that there's trap traders? Well, on the trap traders, what would indicate it would be an arrow up or down, right? If it's traders long and wrong, it would be an arrow down. If it was traders that were short and wrong, short in the hole, so to speak, it would be an arrow pointing up because that would be bullish. The numbers at the top and bottom of bars, that is what we call the order flows ratio. That would be another. I have some videos on YouTube about that, and also I think on my website orderflows.com I explained to it what that is. Basically what it is. It's an analysis of the order flow. Okay, so again, and there's whole trading strategies built around those. What he's referring to is, on the footprint chart, on some bars above, there'll be a number on top and some bars below. Basically, what it's doing is analyzing the order flow in the bar, and depending on what thresholds you set at, it could be bullish or bearish. Does order flow work in all markets? Well, it's kind of a general question because, futures, yes. I mean, obviously you want to have centralized data. Forex, not so much because the data is not centralized. It comes from many different sources, so it's not going to, sometimes what you're trading is not where your data is coming from, so it's not conducive in that sense. But stocks, yes. On stocks that have decent volume, it's going to be more effective than on stocks that have very little volume, right? Because what is order flows? Analyzing the volume of trades that goes through. What's traded on the bid, what's traded on the offer. So if you have nothing traded, if it's a very thinly traded market, it's not going to be very useful to you, okay? So anyway, guys, I'll end it there for today. And I'm going to, any questions, just shoot me an email, mike@orderflows.com. And again, thanks for taking the time out today. So have a great day, everybody. And again, thanks for your time that you put in today.